the recovery from a bear market either comes two ways. Either kind of it comes up, corrects, and then eventually goes, or it comes sharper. It depends on central bank action, liquidity, that kind of stuff. But if I look forward, I'm very bullish because we've just gone through the rate cycle. It's the rate of change that matters. The rate of change comes down first, then sticks. So that's good for risk assets. We've marked down everything in value and price. And then we've got, I've been talking about this a lot, the exponential age technologies. We talk about Tesla, but anybody's been paying attention has seen what happened to AI. It went from me interviewing Emad to say, oh my God, this is coming, to ChatGPT, to everyone thinking, oh shit, we're out of a job within 3 weeks. I mean, that ChatGPT went from 0 to 1 million users in 4 days. We've never seen anything like it. And it keeps crashing with so many users on it. So that's the technology, and we've got tons of these coming. The energy situation that you've been following so closely, the nightmare in Europe didn't pass in the end. It's, we saw what was bad, but the Peter Zeihans of the world and others were like, the Europeans are going to be having to be chipping frozen corpses from the streets. That doesn't look like that's happened. Nobody's run out of energy. Yes, there's been some rationing and stuff like that, but it seems to be contained. So also investors were so negative that I've got charts going back to the 1970s, the AAII investor intelligence survey. It was the most negative since 1970 or something crazy. So usually when all of those things happen and we've got liquidity returning, market's pretty positive. So I love this series because I think everybody's looking that way, and that usually means the opportunities to look the other.
Real Vision founder and CEO Raoul Pal, in his first live stream of 2023, reveals that he is incredibly bullish on innovation, growth, and crypto heading into the rest of the year. Coming off the back what was a horrific year for anything further out on the risk curve, Raoul speaks on why the macroeconomic environment is ripe for growth and exponential technologies to outperform as the rate of change of interest rates begins falling and inflation is coming down fast. Already, with lower than expected inflation data, we have seen a great start of the year for Bitcoin, Ethereum, and crypto in general, launching Bitcoin above $20,000 for the first time in months. In this interview, Raoul breaks down the economic landscape and why investors need to be long-term bullish on these exponential growth assets. Also, only a small percentage of my viewers are actually subscribed. If you enjoy finance content, consider subscribing or liking the video. It's free and you can always change your mind.
Now, but I'm hearing more of this kind of mild recession, soft landing calls from people. And I don't know really yet, I don't really see that. I see short and sharp. And we'll talk about that later in the second half, but I don't really see the mild element. Maybe it's to do with, if we go back to 1980, the Volcker one, right? Everyone talks about that as like this terrifying recession. It was actually a really mild one. And the S&P went down 28%, and that was it. It was kind of over and done with. So maybe there's something to do with nominal versus real. That means that prices remain, demand remains higher because of is that the inflation weight is less, and therefore the rate of change of interest rate increases. The Fed are making it pretty clear they're probably going to go to 25. So it's, as you know, in global macro, it's the rate of change that matters more than anything else, not the absolutes. So if the rate of change changes, all these beach balls start popping out of the water that have been held down by the heavy weight of interest rate rises and that rate of change. That's all gone. So suddenly, emerging markets go up, gold goes up, crypto goes up, equities go up. That whole story. I don't know what the BOJ is doing. I've kind of lost track of them. I almost kind of, I know it's a bad thing to ignore it because people over focus on Japan, and in the end, it's still pretty contained. It's not like they're going to let rates go to 2%. So, and are they going to, I was having this conversation with Julian Brigden earlier on the Insider Talks, is are they going to let it all go, just give up yield curve control and walk away? I mean, no, they've just widened the band. Why would they suddenly decide, oh, you know what, we're just going to let interest rate run wild in Japan now and completely destroy everything? So, but interesting market overall. I mean, it's been a very risk-on week, very risk-on. think of that beach ball, right? There was another weight on the world, which was the world's largest trading economy was closed. So if you reopen, then the beach ball rises. So anything that has Chinese exposure is going to see a net marginal increase in demand from where they were. So I think it's just that. The question is does China coming back into the world economy mean anything yet to the global economy? My tendency is to think that China, again, we'll talk about this later, the Chinese credit cycle, the Chinese money supply tends to lead currently the Western world by about 12 months. So I think if we're thinking of what's happening now, then we've got a 12-month lead time before it starts filtering into the rest of the world as well in some respects. So, and the rest of the world, the impact on the rest of the world, people are like, well, China's opening commodities. It takes time because the Western demand is still going down. So it's really going to make a difference to the commodity market that so many people are looking at is when all three engines are firing. Europe, China, US. When those three fire, then you've got a potential long-lasting commodity rally. But without it, you've still got one or two of the legs of the stool missing. But it proves the point, and it's the point that even Elon Musk was making, is the inflation picture turned a while ago. I mean, I remember him in the summer saying most of the basket of stuff we're buying is down 50% from the high, and everyone's like, no, it's not, But so I think what we're seeing from this is, if you think of two businesses of Elon Musk, one is Twitter, one is Tesla. What has he done at Twitter? Laid off tons of staff. And what has he done at Tesla? Cut prices. That's a recession for you, right? That's exactly what recessions are all about. That's exactly what the Fed want to see. They want to see prices come lower. They want to see a rise in or a lowering in wage demand. So, it's kind of exactly as the framework that you and I have been looking at for a while, which is, recession's coming. And I've lost count of how many, particularly tech companies, have done this now. I mean, it's just endless. I mean, everybody's done at least one or two rounds or three rounds of cutting headcount costs. And prices generally, we've seen discounting. And remember, I think even you and I talked about this, there was a massive rebuild in inventories, excess inventories that were carried into the end of last year. And you kind of knew that after Christmas, anything they didn't sell was going to have to go out the door. And so I think we will see this everywhere, where we see some massive discounting to clear inventories. And again, classic part of a recession. Inventory liquidation is what recessions are all about. So, I think we'll see a rapid inventory liquidation in the first quarter. Tesla's such a favored stock that it's actually lagged. So what I've been looking at is what I call these exponential age stocks, these kind of big technology companies that are sitting on top of exponential adoptions of technologies. In Tesla's case, it's EV, it's AI, it's robotics. I mean, they've got like 5 of them embedded in the business. But all of these, when you put up a log chart, so Amazon's a beautiful chart. Since its beginning, it's been in the log channel since it launched. I mean, it's incredible. It's because it's a network adoption stock. So most of these stocks have all gone down to 2 standard deviations oversold. I put this regression channel that's easy to do on Bloomberg, and they've all got 2 standard deviations oversold. Tesla was the one that wasn't anywhere near it. And then it formed that head and shoulders top pattern and puked. And, the bottom of the channel is about $100 and it pretty much touched it. So, have we got to the kind of levels where Tesla's bad news is in the price? Probably. Not 100% guaranteed, but I would suggest that, is the EV market going away over the next 5 years? Are we going to sell more EVs? Well, you live in Europe and you see it clearer than everybody else. I mean, every bloody car on the street becomes an EV over time in Europe. The US is slower to see it, but it's happening. So I think that the trend continues. So, I'm actually looking at, okay, where's the place to add? The Twitter story, it was really interesting. I know some people absolutely hate Elon Musk. I just observed the whole thing, and a lot of people was like, he doesn't know what he's doing. I went on to a 2-hour Twitter Spaces of him with a bunch of engineers about the Twitter tech stack. I mean, the guy knows it inside out. his tweets are kind of like a snapshot of his monkey mind. Actually, hear him talking. He talks in extraordinary detail about stuff that, is beyond my understanding. And I then went through the rabbit hole of listening to long form Elon Musk interviews to say, okay, what is this man really about outside of the Twitter noise? And I came away, I was surprised. When you hear him talking about artificial intelligence, self-driving cars, rocket engineering, all these things. I mean, his knowledge is not superficial, put it that way. I mean, extraordinary. So in the end, I'm actually more of a buyer of Tesla than a bear. And, I'm biased. I mean, I've got a Tesla Model X Plaid, and it's the best car I've ever had. It's an extraordinary piece of engineering.